Good morning, everyone, and welcome to the Quantum Leap Futures Morning Leap. Our morning leap is our pre-market trade plan setup. We come together, take a look at the market from a macro to micro view, the structure of the market, and then we drill down to determine where our trade levels are going to be, what our targets are, and what our main hypothesis is for the day. My name is Doug McKay. I'm the founder of Quantum Leap Futures. If you're interested in joining us, please send me an email at quantumleapfutures@gmail.com. Okay, just get the disclaimer done. This information is for the purpose of educating members who want to expand their knowledge of the business of trading. It's not for trading or investment advice. You and only you are responsible for the trades or investment decisions made. Trading futures or any instrument involves risk loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody at Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results, and any trades that you see in Quantum Leap are for education purposes only. Please trade your own due diligence and your own trade plan and your own risk metrics. Okay, so let's just start with the news. Forgot to bring it up. All right, we had Canadian RMPI, IPPI, both came out lower than expected. Goods trade balance in the U.S. came out larger than expected. And then we've got at 9 o'clock, we've got composite 20-year HPI year over year expected to be 5.1. Then 10 o'clock would be the big news, and that's the CV consumer confidence. And then late in the day, we've got Bank of England Governor Carney speaking. So just basically the one news once the RTH starts in the morning and one in the afternoon. Taking a look at the trends each morning, I like to start my day taking a look at where we are in the different time frames. In terms of trend, I use a 9 EMA and a 20 SMA and a simple candlestick chart. I'm looking for slope and separation, and then where the trend is being violated. And you can see that we've closed below the 9 and the 20 last month. We continue to trade below and inside this lower wick from the prior month. This month, so right now we are challenging the trend to the upside, and we could be rolling over. Of course, it is still early on that chart. On the weekly, though, you can see that we've got good slope and separation to the downside. We had created a technical gap and a foo-bar, Mr. Sneaky. We closed that technical gap, and we rejected the 9 EMA, and we continue to trend down. So the weekly trend is accelerating to the downside. On the daily, we had the same pattern here, closed the tech gap. We consolidated, challenged the trend to the upside, then we failed, and now we're starting to get slope and separation to the downside again on the daily. So we could be in a continuation wave to the downside on the daily. Going to the intraday, you can see that we have been trending down. They tried to rally the other night. Over yesterday, we fell back down again, and currently right now we're coming up to close this technical gap. There's Mr. Sneaky, no foo-bar on the 4-hour, but we get the Mr. Sneaky with the tech gap coming up to close that gap. That gap fill will be somewhere in around 1887, I believe, by the time we get there. But we do have slope and separation to the downside, so this trend is still very much intact until we come up and break above that 88 level. Going to the 30-minute, we have challenged the downward trend, and now we have a possible start of an upward trend right now. We've got slope and separation to the upside. We do have a naked cross right here, 1872. Mark that in your journal. Likely be retested sometime in the next day or so, if not today. Going down to the 15-minute, same thing on the 15-minute, although we're losing some slope, we still have separation. Although we're losing some separation, we do have slope, but we also have a naked cross down here at 1869. There's a couple of crosses below us, and there's still these ones that we left with this big move down that are way up here in the 1900s. So we don't have to worry about the ones in the 1900s until we get back up above that 1900 or above the 1898.75. But the trend on the 15-minute is up as well. And then just going down to the 5-minute, you can see that again we've got an upward trend. So the longer time frames are still looking down. The shorter time frames, as we drill down to the shorter time frames, we're trying to rally back up. I'm just looking, no, I was going to say there's almost a head and shoulders there, but there's not. So let's take a look at the big picture of what we're looking at. So we've been watching this micro composite that I started on the significant breakout candle. You can't see it, it's behind the profile right now, on the 21st. And from there, we've just been chopping around, gapping up and down, but mainly trading inside of this value area. And yesterday, we fell out of that value area again. We got below the, yesterday the value area low was 1900. Actually, I think it was 1901.50. It's been moved down with the volume from yesterday. But we broke out and we broke below that 1898.50. And my main hypothesis yesterday, as you know, was if we got into the, we rejected the prior day at 1910.25, that we would rotate down, and if we, if we broke that 0150, that we dip into the 1800s and test the 1800s, and that's exactly what we did. So right now we're trading at 1883. We're below this little CLVN at 1884.75. Our key line in the sand is still going to stay the same. This is that 1877.75, which was the 1887 in the September contract. But if we get below this 1877.75, I don't think that the low is going to hold here this time, and I think we're going to come down. We went down overnight and hit that 65.25, got as low as 61, and then rallied from there. I think if we don't hold the 77.75 today, that we're going to come down, and we're actually going to test the low overnight and come down even lower into this 1850. 1849. The 20-day ATR target is running 40.35. So currently right now, our overnight high is 86. We're trading close to there right now. We could put in a higher high, but as it stands right now, our downside ATR, 20-day ATR target is 1845.75. Off of the low at 1861 overnight, our ATR target to the upside is 1901.25. Now, we have today and tomorrow, okay, as the last two trading days of the month. Our open of the month is 1957.50. We are nearing critical mass. Critical mass is a study that simply put is once we extend beyond the number of days left times the ATR, the 20-day average true range, one side has a tendency to capitulate, and therefore the other side takes control and takes over. So with our month open at 1957.50, and today and tomorrow is our last two trading days, our critical mass, believe it or not, is right here at 77.75 today. Below that, it becomes less probable that we'll actually have a chance to rally and test that month open and go up there and give us a positive month. So the critical mass starts to kick in today at 1877.75, and then tomorrow will be adjusted based on the fact that we'll only have one-day ATR of around 40 points. So watch this 77.75 closely today, and that's why I believe if we get below it, we won't hold the overnight low, okay, because we'll probably see that the the buyers capitulate and the bears will take over and push us down in towards the lows and probably go and test that 1845.75, which is our 20-day ATR downside target today. Now, if we hold the 1877.75 and we get above the 86, the overnight high so far, then I'm looking to rally into the 94 and come up and test this 1900. Our upside ATR target is 1901 and a quarter. So if we do hold and break above the 84.50, possibly even 89.50, then I'm expecting a move to come up. The 50% of the significant breakout candle from yesterday is up here at 1890 and a quarter, which is right by that CLVN. So let's take a look at what we've got from overnight. Overnight we went down and we made an overnight low down at 61. And currently right now, our overnight high is 86. That could change. We still have over a half hour to trade, but I'll put it in right now at 86. And then our overnight VPOC, which could change, it could shift down here depending, we've got some undetermined fair value down here. And if we come down and trade some more down in 1880, we could shift down there. We could shift at 81.75, but currently right now, and remind me to check this before we close the session, at 83 is our overnight VPOC, and we're trading right there right now. All right, and then the only real significant LVN is this one right here at the midpoint at 73.75, but because it's below that 77.75, I'm not going to put a lot of credence in it. I am going to mark it on my chart, 73.75 LVN. It also is right there near the close, near the VPOC. So I don't think it's going to play a major factor today, but I am going to mark it on my sheet. And there's nothing else right here that we need to look at. So let's get rid of that. Expand this out. So as it stands right now, if we open up right here, we're going to open up inside of range and inside of value. And, we have that significant CLVN at the 77.75. So that is going to be a key trade level for me right now. Because if we get below there, I got a real nice trade into the 73.75 and the naked VPOC at 72 and a quarter and the naked close. Just move this over. The naked close is down at 71.50. So I'm going to mark that as a secondary target, but I am going to use the 72 and a quarter. I'll probably even scale here at 73.75. To the upside right now, we've got this 84.75, but I really don't think that that's going to bear us any given edge. I'm going to use the 89.50 to 90 and a quarter area as my trade level above. I could use this LVN here at 86 and a quarter, excuse me, but I really don't see a real edge there. So unfortunately, I've got a pretty wide range that I've got to have a specific setup for me to trade in this area, because I think it's going to be quite choppy in this area. You do have this HVN in this middle distribution at 88 and a quarter. Below us, you've got the 1880, and then of course you've got the key level, and this is going to be my key line in the sand. So let me mark that. Okay, and then above the 1890, how did that get moved? above the 1890, we've got this little LVN at 92, but I don't think it's going to be as prevalent. We've got this 94.25 value area high just below this CHVN. So I'm going to use this as my next trade level up. And then above that, then I think we're going to make that run up into the 1900s. And my first target is going to be this 1899.50 and 98.75. Remember how important that 98.75 was? And now we've got the value area low from the microcomposite at 99.50. So I'm going to put that in right there, and I'm going to encompass it with the 98.75. So I don't want to be short unless I'm below 98.75. I don't want to be long unless I'm above the 99.50 area. Now you can really wait and take the safe trade and wait for it to get above 1900, but 1900 really hasn't been prevalent. It's been sliced through several times like butter. So I'm not seeing any major reaction at that number. It's been all along, it's been this 1898.75. Then above the 1900, you got 1900.25, which I would use as your first target above the 99.50. But the real one is going to be up here at 0250. In fact, you know what? I'm just going to move this up to 0250. I don't think that 1900.25 is far enough above the trade area. And then above there, we've got this 1904.25. You know, this LVN. So I'd be looking for some reaction there. And then if we get above that, it's all going to be about this 07.25. And then above that, we've got the 1150 and that 12 area. And we're back into the value area of the microcomposite. So I'm be looking for a rule of 10 and really I'll move up into this 1150. You know, we got as high as 1175. So I'm going to use the 1175 as trade area. And then above that, you've got this 19 naked close and the CHVN at 15. But the main target above is going to be this 23.25 again. Because that's the most traded price inside of this microcomposite. And then all our areas stay the same to the upside. There really isn't you know, much to change. You've got 25.25 as a trade area, 29.70, 29.50, 35, 42.50. I don't think we're going to get up that high. Remember that our month open is 1957.50, so we'll be trying to make a run for that once we get into the 1900s. The upside, I got to mark the upside ATR target, which is right now sitting at 01.25. In fact, I'm going to move this down to 01.25. All right, so that takes care of the upside. To the downside, below 77, you know, look for a move down into the 73.75 of the takeout of the naked close and the naked VPOC. The next trade area, obviously going to be between the range low at 68.75 and the value area low at 69.25. And then below the range, we've got the 65. There's a 67.25. We've got to be careful of that area right there, where we might just dip down below value and below range and then buyers step in front of that 65.25. My intuition is telling me that won't be the case. That will slice through that and come down to take out the naked close at 64.50 and the 65.25 area. I'm going to be using 64.50, but I'm really looking for continuation down into the overnight low at 61. And then below that, there's really nothing down here. This is that, if I squish this together, this is that big area of rejection, long-term price rejection, and I think we'll come down and we'll chop in this area. You've got the 56.50, the 49.75, and then the downside ATR target today is 45.75. All right, and then just below it, you've got this 48.25 CLVN. I'm sorry, below the, no, it's 40, it's below the 49. I'm going to use the 49, and I'm going to change it to a trade area and go 48.25. All right, and then below 45, we've got the 39.75, but the big area, the next big key line in the sand is going to be this 32.50. All right, because below the 32.50, that puts us into this area right here, and you can't see it. We traded in this area for quite a while back in 2014, and the value area high is this 32.50. The value area low is 17.91, and the most prominent price point, and it's prominent. It's not like the area up here. Look at the difference between the composite, where you've got all this area of undetermined fair value, okay, versus down here, where you've got a very prominent long-term price acceptance, or CHVN, and microcomposite VPOC at the 1821.75. If we could below this 32.50, and we're looking for buyers, they're going to come down into this 21.75 because it's been shown to be very prevalent. You can see even when we dip down, okay, on that mini crash that we had, we got as low as 71 or 21.75, just above that 21 level. So look for them to come down and test this level if we get below there. My main hypothesis is all centered around the 77.75 today. If we get below it, then I'm looking for a move down to test the lows overnight at 61 and possibly get continuation and capitulation and hit critical mass. If we dip down and simply rally from the from the low or the close and get back up above 77.75, then I'd be looking for a rotation back up into the midpoint of the significant breakout candle, which is going to be up here in the 90. And then above the 90, then my hypothesis changes to a rally up into the 1900s. I think it is going to be a rotational day, but I think it's going to be a rotational day with a downside bias. But if we get below the 77.75, I think we could actually make a bigger run down into the 45 area, 49, 45 area. But we'll see how they handle this 77.75 area. All right, taking a quick look at gold, or actually before we do that, let's take a look at the Renko with Keltner. Our center line is 82 right now. Our lower line is 76. Our upper line is 88. So pretty close to the areas that we're looking at. 77, is just above there, 77.75, and we're seeing some weakness coming in right now, and a move down to test that 77.75. Watch right here. If we break this 77.75, they'll take a quick flush down to this 76, and then look for a possible bounce from there. If they bounce off of the 77.75, then look for them to rally back up into this 82 and possibly above. Taking a quick look at gold. Gold, we tried to hold value higher. We couldn't. It came back down. Where do we say it's likely to come down and test down at the 1130 microcomposite VPOC? It came down there, tried to find some balance there, and then we dipped down a little bit lower, tested the value area low and that CLVN at 1122.30, and we bounced since then and now challenging this 29. Really, to me, the trade levels for gold today, 1122.60, a break below that, look to go down to 18, but I'd be looking for a move down into the 12, if not all the way down into the 1106. If we can stay above this 29, look for a rally up to 34 and 37 with possible continuation back up into balance right now, which is up there at 1145. Above 1148.70, then I think we challenge that 54, 55 area again. And remember, this was our main target above if we broke out of this balance, and we went up there and the sellers, stepped back in and then rotated us back down into the current balance that we had just broken out of. That's what I'm looking at in gold. As always, that's going to complete our pre-market session. Trade well, trade safe, and we'll catch you on the flip side.